You were listening to chartingwealth.com for Monday, the 9th of May, 2016. What do we see going on? We always start with IYY. That is the iShares Dow Jones U.S. Total Market Index Fund. So it tracks the entire market, which topped out back on the 22nd of April and has been going down since then on our two-day charts. What do we see happening? Well, Friday was actually a slight up day, 0.32%, but that didn't affect our two-day candle for being a red down candle. We have three strong down candles. We have a two-day trend line. The market is still well below. We had a crossover back on the 28th of April going down. If we look at our 4-hour chart, what do we see? Saw some movement in the morning, down, and some up movement in the afternoon, which is what triggered the up move. We are hoping that the market is going to make a short-term correction up so that we get what we call a pullback, a confirmed pullback, which would be a crossover on the short chart going up, and then a rollover below the two-day trend line going back down. That would be our jumping in point to buy into this market on a virtual trade. When I say virtual trade, again, the caveat we always give is we are not a stock calling service. We do not get paid for that. We do not give that advice. We are an education firm. We want you to practice with us until you get good enough to make your own decisions. So go to chartingwealth.com, go through all our tutorials, and follow us every day, just like you're doing right now. Now let's go back to the two-day chart. We're going to go look at SPY. What do we see there? Well, we see on the two-day chart on SPY, it looks somewhat similar to the total market. It does quite often, not all the time. There'll be little differences. Remember, SPY is the Standard & Poor's 500, which is a lot of the volume of the market. That's why it trends similar a lot of the time. Crossed over going down on the 28th of April and has continued to move down. It was technically up for the day 0.36%, a little more than the total market, still well below the two-day trend line. Four down candles and a big wick, down wick on the last three candles representing 6 days of movement. Derivative oscillators continue to heat up, and the MACD and the signal line are continuing to diverge. That is, move away from each other, meaning more down moves on the big chart. What do we see going on intraday on our 4-hour chart? We do see the derivative oscillators losing energy. We're getting closer, potentially. We're converging to a potential crossover going up on our MACD. We have down movement in the morning, up movement in the afternoon. You might say this does not look like up movement for the entire day when we compare both our morning down movement and our afternoon up movement. Again, we use Heikin Ashi, which are average pace. It's another way to do Japanese candlesticks. We think helps you much better track trends and reversals. That's why we use it. So we're hoping we're going to see a short-term reversal going up in the opposite direction of the big chart so that when it rolls back over going down, we can find a jump-in point. You might say, wait a minute, why would anybody want to jump in a down-going market? I'll tell you why, because there are things called inverse ETFs. ProShares short is an S&P 500 reverse or inverse or short ETF. Amazing. Look at what it's doing. It's actually moving up as the market moves down. That's the sophistication we're looking for. Okay, now we're going to range back out to our two-day chart. We're going to look at the Qs. Qs, strong down move since it crossed over going down, actually even before then on the 22nd of April. We've continued to see the market moving down. We still have a down two-day trend line. Derivative oscillator heated up even more on the two-day chart throughout the course of the day on Friday, and we have a continued diverging, moving apart the red signal line and the blue MACD moving average convergence divergence line. If we look intraday, what do we see? Well, we see down movement in the morning, some up in the afternoon. For the day, the Qs was up 0.45%. We are seeing, still below the two-day trend line, but we are seeing a crossover at the end of the day going up, which is good. We're going to look for a reversal potentially over the next week or so. If we can find that, going to be looking to get in and ride that down wave if it moves up and then rotates over going back down. How will you know when that happens? Well, you'll be listening to us every day and we'll help you find it. Okay, there's where we are on the 4-hour chart. Going to go back to our 2-day chart, and we're going to lastly go to gold, which was up 0.94% for the day. Gold crossed over, going up on the 2-day chart back on the 2nd of May, and we saw the derivative oscillator flip over about the same time. Derivative oscillators continuing to grow. Difficult to draw a decent trend line at this point. We had the candle that ended on the 2-day chart on Friday actually is an open down box. Looks like gold is really topped off somewhere around 123.04 right now. Let's look at our intraday moves and see if that tells us much of anything. Gold crossed over going down. We haven't seen that. We haven't seen gold come back over and give us a time to enter. Looked like that might have happened today because we had a lot of up movement in the morning and up some more in the afternoon. Again, gold up almost 8% above the 2-day trend line, which is what you want to see. Just have to continue to watch, see if gold goes ahead and moves above the MACD crossing over the signal line. Still negative on the derivative oscillator, so we don't have a signal yet for jumping into gold, but pay attention. If you're a gold bug and you like to play gold, let's see if we can get a virtual trade, get into one on Monday. If we have this short chart parallel again, the movement in the 2-day chart, which is a confirmed uptrend. We'll wait and see. Thank you so much for joining us. Hope you have a great week in the market. If you are not already signed up for our newsletter, go to chartingwealth.com and do that. Why? Well, you'll get a video podcast every day. You'll get it in your mail. You'll also get links to our How to Read a Stock Chart video, which you've got to watch in order to know what we're really talking about. And you'll also receive any trainings that we do via email. And in addition to that, you'll get a link to our layout. And sometimes folks write me and say, I can't get your layout to work. First thing you got to do is go to freestockcharts.com, set yourself up a free account. Then when you load in that layout, you will get the layout that we use here at Charting Wealth from freestockcharts.com. Thanks so much for listening. You have questions, problems, concerns, issues, we love to hear from you. You can email us directly from the website. You can follow us on Facebook, Twitter, Instagram, YouTube, you name it. We're there for you from chartingwealth.com.